Hey, everybody. Welcome to the Multifamily Legacy Podcast. I'm your host, Corey Peterson, and today we've got a really great show for you today. Super excited to have one of my good friends and buddies on the show, and we're gonna be talking about a little bit about the mortgage banking business. There, I said it right, the mortgage banking business, and how getting the right loan and choosing the right banker is really essential in this game of the multifamily game and trying to get an edge. You really want someone on your team who is knowledgeable, consistent, and then really has the resources and the tools to play the game. Before we get into that, though, first of all, want to just tell you, I love when you guys take time to go to iTunes and give me any reviews. So I would just want to strongly encourage you, if this podcast has helped you in any way, good, bad, or ugly, that you take the time to go to iTunes and just submit a review. So we'd love to put you on air and talk about it. Secondly, we now have 3 positions open for our mastermind group. So if you are in a space where you're in the multifamily game and you need some resources, a mentor, a coach, and a team to help support you, to help you grow and really help you level up to that next level, then the Kahuna Mastermind could be it for you. And so if you'd like to learn more, I'm going to ask you to email my wife, Shelly, Shelley, at kahunainvestments.com. So Shelly at kahunainvestments.com. Tell her that you're interested in the mastermind. She'll reach out, give you more information, and talk to you about it. Our mastermind is $5,000 up front and then $1,000 a month. Most people tend to stay for a year or longer. We'd love to have you in. We got a couple spots left to fill, and really it's all about community and the power of everybody getting together to drive forward. And more importantly, you're going to get access to me. It's the one place that I give a lot of access to Corey on phone calls, on communication, on underwriting your deals, really just that level up hand-holding that you might need in order to be successful in this game. So with that said, I'd love to introduce my next guest. His name is Aaron Moll. He's been on the show before, but Aaron is a mortgage banker in the Detroit office. He's focused on mortgage originations, and he is involved with commercial real estate for over 10 years. And he's closed over more than $1 billion of transactions. And honestly, I just say that Aaron is really a trusted advisor. He's someone that you look to when you have a loan and you want to know what is going on in the market, the area. He's going to be the person that I think you can go to that would give you the good, bad, and the ugly and just tell you straight how it is. And I think that's so refreshing. So with that said, let's welcome Aaron Moll to the show. Hey, Aaron, welcome to the show, brother.
Hey, Corey, how are you?
Man, I'm doing amazing. I'm super excited to have you on because I think I don't think you can address the importance of having a trusted advisor, is what I'll call you, as my mortgage broker. And really the word broker doesn't really necessarily do justice of our relationship that we have, but why it's important to have a solid relationship with someone that can help you get loans. And so for everybody that's listening, can you just kind of give us your short background of what you've done and kind of where you've came from?
Sure, man. Sure. It's always good to be with you, Corey. And thanks for having me on the show. My name is Aaron Moll. I work with Berkadia, which is a JV between Jefferies and Berkshire Hathaway. We are a licensed seller servicer for the Fannie Mae, Freddie Mac, and HUD loans, or collectively known as the GSEs. So those are kind of our proprietary loans that we place with multifamily. And then we broker, for lack of a dirty term there, we broker to a variety of different lenders. We want to be your problem solvers. So we go to banks, debt funds, life insurance companies, CMBS, Wall Street lenders, and kind of everything in between, just to kind of meet our clients' goals. So, and then I'm based in Detroit, Michigan.
Yeah. One of the things I love that you guys, you're an actual DUS lender. And so can you maybe explain what that means for people? Like what does a DUS lender mean?
Sure. Put in simple form, a lot of time I equate it to folks that aren't as familiar with the space is residential mortgages. If you go to your local lender, Bank of America, all the way down to your local credit union, and you get a home loan, they're likely going to turn around and sell that to Fannie Mae or Freddie Mac on the back end. We do the same thing. There's a little more selective a group, that has those licenses. There's probably about 20 of us. I just happen to be part of the most active group across the board. We tend to be number 1 or 2 with Freddie, number 2 or 3 with Fannie, and number 1 with HUD. So when you mix it all together, we like to say we are the number 1 GSE lender, which usually is true. So, we're experts. We don't try to push people into a Fannie Mae or Freddie Mac or HUD product because that's really what we're good at. We're good at all. And so we try to find the best fit to bring you guys a competitive set. So when I say I'm a direct DUS lender, that means I have a direct relationship with Fannie Mae, Freddie Mac, and HUD, and there is no middleman. Those are my proprietary loans.
Yeah, and the key is there's no middleman. So sometimes when you're not working with a DUS lender and you're working with a different third-party broker, for lack of a better term, you're going to get paid. You're going to actually get charged probably 2 commissions because the DUS lender is still going to get their commission. And then if you're working with someone that's bringing you the DUS lender, you're going to pay a commission as well. And so that's just something to think about when you're out there looking for, that relationship. But so I think what I love about working with you, Aaron, is that you get the power of Berkadia, and then I think that trickles down a little bit into some of your other types of loans. So let's talk about that for a minute.
Sure. Well, where do you want to go with that?
I'm just saying, in my mind, so if you're waving your Berkadia flag, right, and then all of a sudden you're going to go to talk to a CMBS lender, they just understand that they don't want to screw you up. Like they respect it, and they're like, that's good business. Let's do good business, right? Or if there's a bridge to perm situation, there's so many other ways that you can use the power of the volume you guys do to I think you have stronger relationship with some of these other banks.
Sure, and I can appreciate this. So I guess where I'll start is I always take a client when they send me a new deal. And a lot of times they're acquisition deals. So people are chasing stuff on the market. It's listed. Maybe it's an off market, but a few people are looking at it. They want to know how they're going to be competitive. Corey, you and I do this all the time where you'll find some property in some market and say, hey, where can I get this Fannie Freddie? So on a high level surface, we talk about, well, before we go Fannie Freddie, what's your goal? Is this a 5-year hold? Is it a 10-year hold? Are you putting a lot of CapEx into it? How's the occupancy? So I'd love to jump on the phone with you or someone else and just talk about what your goals are. And then from there, we can kind of fill in the blanks as far as, based on what you're telling me, it is a Fannie Freddie with maybe a CMBS option, or it's not going to work. We need to go to a bank, put on some recourse. The property doesn't stand alone by itself, or look at like a non-recourse debt fund, which is a little more expensive, but you get no personal guarantee. So I always start with, tell me what you want, and then we can kind of fill in the blank and figure out your loan goals from there.
Yeah, and so I always have the same prerequisites. So my highest and best is always Freddie or Fannie because you usually get the best terms and best everything with those agency lenders. But once you have a deal that doesn't qualify for that, or it's in a market that is not that Freddie or Fannie won't do, or a smaller market, and we've had that multiple times or even student housing, which is they used to be in it, now they're not. And the one thing with the lending world that it's always changing.
Very much so. No, man, you're right on. And you hit a couple. We're also in the middle of a pandemic too, right? So we had the start of the year, student housing, you mentioned that, and you and I have done some student, there was already some allocations annually from Fannie Freddie where they were kind of putting up the caution flag. 2 years ago, Fannie and Freddie were 80% of the student housing permanent lending market, 80%. They kind of realized they were getting the lion's share. And from their regulator, the FHFA, they decided, you know what, we need to somewhat put some sort of cap on the amount of student you're putting out each year. It's an unofficial cap, but they started to ratchet that back. That was before the pandemic. Then the pandemic hit, a lot of uncertainty about what schools are going to be open, how that's going to work, are they going to play sports? Just a lot of conversation around that product and that asset class. But what we're finding is most folks are okay. We now have a lot of heads in beds, especially in your Power 5 major schools. Yep. So it's a bit of a tweener right now with student, and
it is a tweener because I'm a 50-50 mix, right? So I look at my portfolio. I've got 4 student housing projects. 2 are doing okay, and 2 are not. And and who would have known? And it really comes down to the individual college and the state, whether we're very aggressive in saying we're going to reopen and we're going to go back to in class, and so, but it's still the COVID scare. even though colleges said they're open, doesn't mean that parents agreed.
Right.
And parents are voting right now with their wallets.
There's so many particularities. I think everyone in the market has kind of just hit the pause button and gone, let's give it a month. Like from where we stand today in early September, the earliest days of September, just after Labor Day, we now had kids move in. Now they're actually supposed to be going back to school, whether it's virtual or in person or whatever it is. Because I've got clients that have markets that are completely shut down. There is no in-person classes. Yeah. And they've leased up.
We've got two properties that are 50%, right? And so one, Eagles Village. So you got the loan on that one. We've been 100% 2 years in a row on fall semester. And all of a sudden we're going to hit like 55% occupancy. And we're like,
and you're in the Midwest. And that's the thing. It's like, it's location specific, it's school specific.
So
it just goes on.
It's crazy. Now, this is why it's more important to have a good lender. And I'm going to dote on you a little bit, talk about some things that you've done for me that I think are above and beyond. So this is where the relationship, and this is why it's important to have a relationship with a good mortgage ally, in my opinion, is because, so on some of these, I'm like, hey, listen, Aaron, I feel like I'm going to default on a loan here, or like, we're going to start missing payments. Like, we need to get in front of the lenders. And you reached out and helped make and open that conversation, that introduction, which sometimes is really nice. I mean, it helps cement what's going on. And you don't have to do that, but it's really nice when you do. And I think it goes a long way.
And it's a non-issue for me. I mean, Corey, as I've said before, even on your previous podcast, I love doing repeat business and getting clients like yourself that I can have done 4, 5, 6 deals with. Make my life easier because I can rep that, hey, the portfolio has been good. Your ability to close and do business has been good. Your ability to manage property has been good. So it just helps. And so I certainly appreciate it. It's been some interesting times, going through deals that go 100% to 50% overnight. It's gonna work its way out.
Yeah, well, and it will. And so that's that, and that is our aspect as well. Like, it's a global pandemic. How do you put that in your pro forma? You don't. You just don't. And but you gotta be shifty. You gotta be willing to be flexible. And together we all solve problems. And I think that's, the banks are solving problems as well. They've offered us some type of relief. We don't know exactly what it is yet, but they understand that we got to get through this, and then things will probably start to normal out. Right.
Right.
So one of the questions I've been getting a lot on my podcast is, do I have to personally guarantee a multifamily mortgage or note, right? And I would love, because I think that's a loaded question, but I would love to hear your take on that, Aaron.
The answer is no. You do not need to personally guarantee. In fact, we try everything we can to have you not personally guarantee mortgages. Multifamily is the gift that keeps on giving. It is the best asset class year over year for the last 10 plus years. When you compare it to the other major food groups of retail, office, industrial, the multifamily space just continue to perform. Yeah. And so we have a lot of lenders chasing that. We have a lot of lenders that only focus in multifamily, like Fannie, Freddie, and HUD. And those are non-recourse loans. They don't want the recourse. They'd rather do a deal that stands alone. So our goal is to, when you're looking for a permanent loan on a deal that's stabilized, is put you into a non-recourse sort of instrument.
Okay, so the key word is stabilized. Now, what if we don't have a stabilized deal?
Sure. So there's also a variety of different ways you can look at a non-stabilized asset. There's non-recourse bridge. There's even non-recourse construction loans.
Boom. It's all about like what's out there, because there's enough money chasing this sector. It used to not always be that way, but like right now, I feel like you can get non-recourse on just about any type of loan that's out there. You may pay money for it. You probably get your rate down sometimes if you were to give a personal guarantee, but not always needed, right?
Correct. And there's a lot of reasons for that, why multifamily is some of the best debt in the market. We could go into that for a long time, but there's obviously granularity to the rent roll. When you have 120 units, you have 120 leases. You're not stuck with 2 office tenants or something where you go from that 100% cash flow like you're talking about earlier to 50% if one of them leaves. So it's a good underwriting, for the lenders, and again, the assets just continue to perform pretty well.
Historically, they just perform if they're ran correctly.
Absolutely. So, to go to a non-performing asset, if you brought me something, Corey, that said, hey, I got a 75% occupied deal, the seller's been undercapitalized, they're a mom and pop, I think there's a lot of opportunity here, the rents are low, I'm buying this on a 3 cap. That's fine. Cap rate to me is not a relevant part of the conversation when you're not stabilized. It's really just about cash flow. Even if you don't cash flow enough, we can still find a home for that. That's either going to be non-recourse bridge, which is going to have a little higher interest rate, but you get an interest-only component to that until it stabilizes, or bank. And if you go bank, a lot of times your rates are lower, but you're going to sign the recourse dotted line. And a lot of that is just conversations between me and you, Corey, or whoever, as far as, are you comfortable with that? Do you want to take on that risk of
personally
recourse?
guaranteeing, of the recourse? Really, in other words, if the deal goes bad, they could come after my personal assets.
Yep,
right?
Exactly.
Now, think about this. So we did actually do this in Hawkeye. So Hawkeye, we were with a credit union. By the way, you got us a credit union. It was great, and that was really just by you saying, "Hey," because we're trying to find new debt on that property.
Correct.
When we first bought it, and there wasn't a lot of takers that were competitiveness that we wanted. And you're like, well, let me just see where the existing debt's at from the seller. And it was with a credit union.
Right.
And what did you do?
Yeah, we came in. That one was I think you've had the trifecta of student housing where you've been under contract on deals that have been like 95% occupied, and all of a sudden they go to like 80 because the seller doesn't know what they're doing. The biggest no-no in student housing is don't tell your staff you're selling the property when you're in lease up, because they stop paying attention. So that one, we were under contract and application with the Fannie Mae execution. It was like 95% occupied.
Yes.
Going down with Fannie, and all of a sudden, boom, the school year starts. It goes to, I think, like 75% occupancy.
Yep.
And we had to pivot. So we went to local lender that had the debt. They took you on as a new sponsor.
Yep.
I'm trying to remember if they even took a guarantee on that one. I
don't think we did.
I don't think they did.
That was one of the things you did. You're like, dude, they never do this, but they did it.
They took a non-recourse. They recasted the loan to you, and we knew it was going to be a transitional bridge, even though it was with the credit union. And lo and behold, you turned it around like you do. You put your magic touch on it, went from the 75% back up to 90+%.
Yep.
On a stabilized side, we went back out to the market to put a stabilized, in that case, it was going to be a CMBS loan with a lender we've worked with before.
Yep.
And the credit union turned around and said, we'll beat that.
They wanted the debt. And they made it the best deal ever, man. It was like, oh my God, we're stupid if we don't take this.
Right. When lender legal is like $1,000, it's a pretty cheap date. So
it was great, man. So and that's that. I always say that, like, that is the relationship aspect of this business, because some brokers, for lack, I keep saying the word broker because that's just what it is. We'll call it that, even though it's a dirty term. Okay.
Right.
But
I put on my white collar Tinder profile, mortgage banker, Corey. I'm not a broker.
I'm a mortgage banker. I'm not a broker. I'm a banker. But I always say, like, some bankers would be like, listen, you're going to use this place because I'll make more spread. I'll make more rate. In other words, they're thinking about themselves more than the project or the relationship of getting paid time and time again. And I mean, I've seen that happen where there's ethics in there, and there's like, you know what, you're going to use this because this is, I know I'm going to get paid at this shop, versus a credit union that may or may not like want to give you as all, what you'd normally get from the relationship at, call it Lima One or some other CMBS loan. Right.
Right. Yeah. I've always said my whole career, even to my analysts, never bite the hand that feeds.
Yeah.
I've done a number of deals now. It's all about getting you the best execution.
And here's what I love too, is that not only, and this is really a testament of what a good mortgage banker will do, is that now it's not just Aaron. Aaron has a team, okay? And Aaron will actually kind of like, they underwrite my deal. Like, you put together, like, when we're going to go to market, you've actually had your analyze, I don't know what you should call them, analyzers or analysts.
Analyst, yeah.
That's the right word. See, I barely met at a high school. I don't have these technical high dollar terms.
I'm changing all their titles to analyzers. So
Have the analyzer do it.
I like it.
So, but they do what they do, and they create a packet that now is like tells the story, and we talk about that all the time about being able to tell a story,
Right.
And
Right.
put some color on that. Like what does that mean to you? Like, because I think that's the most powerful aspect of what we do and how
Right.
you do it.
Well, you were asking me earlier to touch on why we're successful with other lenders beyond Fannie, Freddie, and HUD that we do a lot of business with. And a lot of it's just the sheer power of the size of the company I work for. I'm very independent on how I work. Corey, you're probably used to just working with me and my analysts, right?
Yep.
But I'm part of a big team. And what you don't see is that narrative you're talking about. You know, we have a huge staff in India. We are the largest non-bank servicer in the country with $300 billion of servicing. So I have a lot of data. I have a lot of information in my own servicing book. And I have a huge back office staff where if you send me a deal, whether it's listed or not, that T12, that rent roll, that OM, I ship that off to India and I can have a narrative and some sort of OM of my own in a matter of a couple of days. And then my analyzers, and I can put our touch on that specific story and get that to the market and do it a lot quicker than folks who just don't have that back office, the smaller groups. And, you know, we just happen to do a lot of business with our life insurance companies and CMBS lenders and what have you. So we have very, very good relationships with our lenders beyond GSEs, just from sheer volume that we do business with.
I think that's one of the key components of why I love what you guys do. And so, I mean, you know, I pivoted. I've been with another guy that I really cherish, and I've been with him for a long time. But I had to make a change because why? Because I'm a businessman first. I love relationships, but I owe it to my business to go out and find the best purveyor of a loan. And so far, I've not seen anybody that could beat what you're doing. And all the things, when I add, you know, put it all together and put it on, you know, two sides, an A and B, it pencils a little longer on your side, right? Of the value, the benefits, right? Features, benefits. And I think that's, at the end of the day, that's, you take the relationship piece into it, because that's important. We got to have good communication and feel like, hey, if I called, is there a timely response? If that button's a yes, then now you put that aside because it's yes with the other guys. Well, now you got to put the two things. What's the product? What are they delivering? And is it the same or different? And the answer is it's different. And I think because there's a lot more power behind you as with Berkadia behind you. And like you just said, the analysis, your analysts and all the data that you get, I think it helps sell my deals way better.
Well, glad to hear. And, you know, it's one of those things that we could sit here and laugh, and we've had a lot of laughs over the years. We've done a lot of deals, but like, I got to perform. It's dollars and cents. It's a business decision. If you're not feeling I'm giving you the best debt, that's on me. So I wake up and just got to make sure we do the best job for it.
But we have those discussions. I mean, so this is the part sometimes, like, listen, my job's to push, right? As an owner, I push. I don't try to push hard, but like, I'd be like, listen, here's what I need, right?
Right.
I need you to go find this, right? This is the way I underwrote this deal. Can we find debt to do it? Because if it's not this, and then really the other part is I got to be able to listen, the feedback. Hey, man, what you want ain't going to happen in this market. So you got to figure out how to pivot, and can we still make the deal work?
Right. And we've done some fun ones. I mean, we've done small
I mean,
schools.
Think about the Palms.
Right.
Then we swung that one out of the park on the refi.
Right.
And we did you did the initial, did you do the initial debt on that one? No, you didn't.
Another DUS lender did that one. And I think if my memory calls, they kind of told you we can't do it. And you called me and said,
oh, wait, that's right. You didn't do the Palms. Gosh dang it, that's right. That was another debt.
Right.
That was our.
Well, I did do the Palms, and then it had to go back to the lender.
Hey, you queued it all up.
Right.
To make it look pretty. And someone else took the
lender said, hey, we can't help you. And I said, I don't know about that. And we got you a Freddie Mac term sheet. Yeah. And then with some finer print, they had to take it back. Yeah. But I'm still waiting on my commission from that lender. I haven't gotten it yet. I keep sending them invoices.
Yeah. All right. That's funny that I brought that one up. See, that's how short-term memory mine is.
It's all good.
But let's talk about too. Here's another aspect of what a good mortgage banker. That's my new vocabulary now.
I like it.
I'm saying it enough. So after this show, that's what I'm going to say from now on. But I'll probably forget in about 2 minutes. The relationship or the aspect of, so I'm using our new deal that we're working on, which is University Crossings. And this is a deal that I already own, but we have a phase 2. We're going to add $7 million of development. And so talk about what you did on that, because you went out into the marketplace, and tell me like what you did and what you find.
Yeah, sure. This is an interesting one. We, again, are in the middle of a pandemic. Student housing is challenging. You got a deal that you bought that has cash flowed and has been occupied, but you haven't been happy with the return.
Correct. Because
of expenses and just it is what it is, right?
We didn't get as much rent increase as we wanted, and we have some higher expenses. Now this school year we're doing actually much better, but we needed more beds, and we just happened to find them. So I'll cue this up. After looking to the project, we did a site visit, and we're like, how much of this land is actually ours? Because there's like a little wooded area. And so we got on a hunting map, Gaia, or actually it's a trail map, Gaia Maps, and there's a little deal you can press. You're like, wait, I think our land goes pretty far here. I think we got quite a bit of land. And so after hunting a pecking, we realized that we had like 5 acres of land or something like that. And after we really started hunting and kind of figured it out, we found that the original development was planned for another like 4 buildings. And so we ended up getting the plans for that from the architect was retired, but he sold us the plans for real cheap. Now we have to still get them updated for today's code, but I mean, they're still going to work pretty much. And it's all laid out. So it's like, dude, this is an easy deal. And so then you took it to market, and we're in the middle of COVID.
Right. Yeah. So we go to market, and I told you from the beginning, this one's unique because it wasn't really a construction deal. It was a bridge refinance off of another loan on 3 cash flowing buildings, but you wanted to demo one of the buildings and add 5 new ones to basically, at the end of the day, double your unit count and get your economy of scale and your expenses. Your IRR, your cash and cash yield goes to the roof. NOI goes to the roof. It makes all the sense in the world. So we go out.
It's a very viable deal.
Absolutely.
Yeah.
So we go out, and you're right next to campus. I mean, there's a million positives to the story. We go out to the market, and I told you this is going to need to be a bank deal. You're going to need, are you okay signing recourse? Yes, Aaron, I'm okay signing recourse. Okay,
great. There's that word.
But I asked.
It's no but. It's no but.
I asked your permission first. Are you okay with this? And we went out to 15 non-recourse lenders, and we got what we expected. A very expensive loan that wasn't very sexy and wasn't very attractive compared to what a recourse loan would look like in this case. But I'm based in Detroit, Michigan, and this deal is in, can I say where it is?
Yeah.
Columbus, Georgia. So I also went to a couple banks, which is me, I'll use your phrase, hunting and pecking. I like that. Trying to find banks with me being in Michigan. And I've done some deals in Atlanta and stuff, but not with banks. So I went back to you, Corey, and I said, we need to expand the search.
Yep.
And this is why I love being on the team. Like, you were okay listening to me, and you came up with a great idea. I've got a guy who's in my network. He's local to this area. He's going to get some banks for us. I already had my whole
queued us up with 3 awesome leads.
Absolutely. Like, without a doubt, here you go. I just talked to these bankers. I'm local. I'm in this market. I already had my narrative and my kind of pitch deck put together, and we just forwarded it on. We should, fingers crossed, be getting our first term sheet from one of those leads here shortly.
Yeah, and I got to give you my personal financial statement today. It's on my checklist.
Please give me your updated. Yep, that's a good time to remind you. And also, I teamed up with a guy in Atlanta that works for a competing DUS shop that I used to work with at Lincoln Financial when I was a life co guy. He's a great guy. He's in Atlanta. Again, if whatever you're going to pay me on this deal, if it goes with him, I'll just cut him out of mine.
Yep.
And we're working that angle too, to bring local expertise to local lenders, because that's what we need for this one.
Yep. So I love how this thing works. And I want to just take a pause for a minute and just say, listen, the power of your network. Guys, if there's one aspect of like life that I would say you've got to master is the people that you meet and how you can consistently stay in touch with them. So Aaron came back to me and said, hey, Corey, we need to find some local banks. And I was like, hey, no problem. I'll get this covered. Because I already knew it took me 2 calls. The first call was I wanted to call a guy that was in one of my networks that was actually a lender per se, but I knew that after the call, he wasn't the right one. So then I just reached out to my other group and I said, hey, listen, I need you to put this out on the chat box and find me someone local. And all of a sudden, within 5 minutes, I get this like, hey, John, and I get a quality introduction to, I can't remember what his name was, but let's call him John. And John, this is Corey. He's a good dude, yada, yada. He needs 3 lenders. And John is actually a developer in the marketplace of Columbus, Georgia, knows. And he's like, yeah, no problem. So then John sends 3 emails to 3 different bankers. And this is what I love about the way he sends, because it's just exactly what I would do. He cut and paste the exact words and sent the same email to 3 people, right? Mm-hmm. Which is exactly what I would have done, because I'm like, dude. And then Aaron had the same canned response in all 3 ones too. Like, here's the pitch deck. Here it is. Here it is.
We only have so many hours in the day.
Right? But the key was, it was 3 quality introductions. And guys, I can only just like tell you who you know, like when you decide to really do the multifamily business, you've got to network like nobody's business. But more importantly, you've got to stay in touch with those networks. And because, like, I don't know John, but I know the guy that knows John. That's all that matters, right? And so because of that, like, you can get, like, it's not what you know, it's who you know, and truly how well you know them. That's how the game of life is played. So let me get off my soapbox, but I just wanted to take a little angle there for a minute, because that is crucial. So if you're not putting your contacts in a CRM, a database to like track that, you're screwing up. Just like take that to the bank as a mortgage banker.
No doubt. No longer a broker.
So but here's the great news. So we don't have a term sheet yet, but I already know we're going to get way more favorable terms, right, Aaron?
Absolutely. Yeah, it's where we needed to go. And again, I couldn't have done it without you. And that's the power of the team.
Yeah.
It's great.
Well, and we'll leave it on that, because that's really is what, at the end of the day, you have a certain team that runs with you in this multifamily game. And if you're smart, you keep the ones that are really good, you keep them tight, keep them close, and you use them as a resource, and you communicate often, which is what we do. And that could be, your mortgage banker, your PPM lawyer, your cost segregation person, all those things you're going to do repetitive business with. Find not just good people, but great. When you find a great team member, you keep them. And you start asking what they do, like, for fun. Like, I know Aaron likes to ride, right? And I like to ride. Now, we've not rode together yet, but we talk about motorcycles a lot. We just talk about, I talk about rock crawling. He took me to dinner last time you were out here in Phoenix. I met your dad.
Yep.
And that's where you take your relationship. And so and you actually initiated that more so than I did, right? And I thank you for that, because that really helped cement our relationship on what we do and our ability to keep transacting and doing good, clean business.
Right. Well, I mean, the deals that we work on, soup to nuts, we could be talking for 6 to 8 months on a deal. Could be as soon as 2-3 months from start to close. Yeah. But you get to know somebody over the course of a multifamily acquisition.
Yeah. And then you find out if you like doing business with them or not. So I always say, if you can do business, like good, clean business, then jettison the person, right? Vice versa. Like if I was a pain in the butt for Aaron, listen, there comes a point where the money's not worth it. And you'd be like, dude, this guy's an idiot. I hate working with him. He's so demanding, whatever it is that would make you do that. And so it's a two-way street. But when you find that good chemistry, man, keep it and work it and develop it, because those relationships will take you really far, just like it has with our relationship as well. So I'll give you the last word, Aaron. So if you wanted to give anybody any piece of advice on lending and loans and just the whole world of what you do, what advice would you give them? I know it's on the spot, but.
Ooh, no, it's fine. I don't mean to put the mortgage banker in the spotlight, but I think you're right on, Corey. You find one or two folks that you really like working with, and you lean on them. The same that you're going to trust an attorney to give you the right legal advice, and you're going to trust the right CPA to give you the right accounting advice, manager to manage your property. Find a banker that you can work with, that you can talk about what you want to do, and that listens. Because what I hate seeing is folks that are really, really good at Fannie Mae. And so all they want to do is put the borrowers in Fannie Mae, or they're only good at life insurance company loans. All they want to do is life co loans. Well, have you thought about a 15-15? No, I'm telling you I want cash flow. Oh, well then let's do an interest-only loan for as long as we possibly can and boost your cash and cash yield. You need to find somebody that's a true, I'm going to use the word again, broker, and talk about all the different loans. Because all we're here to do is make you guys more money. And I'm never going to sit here and tell you how to run or operate your property. I'm just here to listen and try to figure out what you want to do, and then I can tell you how to do it.
Amen. Well said. Well said. Guys, thank you for taking the time to listen. Oh, no. Hey, listen, Aaron, if they want to get a hold of you, how do they find you?
Yeah, sure. They can call you.
No, that's not a good one.
No, I'll rattle my phone number. Working from home these days, so cell phone's best. 231-360-1840, or my email's Aaron, Aaron, .moll, MOLL, @Berkadia.com.
Cool. Listen, guys, if you are looking for a great mortgage broker or mortgage banker, I can't recommend Aaron highly more. He really is a solid guy, and he's a good friend. So I really appreciate you coming on the show. Guys, listen, the banking world is, the multifamily world, and the game is the best game out there, in my opinion. It is the one thing that can give you true cash flow, appreciation, wealth, generational wealth, everything you ever wanted in life. I believe this business can give it to you. But before you even can get there, you have to believe it. You have to make a decision. You have to tell yourself, today's the day. Today's the day. I'm gonna settle for nothing less but success and profitability, and create the path and choose the path and stay on the path and remind yourself daily while you're on the path. Guys, if you believe it, you can achieve it, and your paradise is possible.